Hi everyone, let's cover my 4-hour time frame Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside. In this scenario, we're working on this red wave 4, which preferably finishes after or on top of the 18th of February, which is today. And the common target area for your wave 4 is the 0.236 to the 0.5 Fibonacci, taken from the low of 2 to the high of 3. Giving you a target between 95.9 and 80.9k, which we have touched. Preferably, however, price is not going to lose 85k because then you're going to lose the lowest degree wave of 4 on the chart, and that would be a problem. Now, after wave of 4, we're looking for an impulsive structure to the upside in a wave of 5. If we then zoom in more locally, then two scenarios that I keep an eye on is, first of all, a triangle. So we then have a wave A, B, C, D, E, and then you look for upside. Alternatively, if price does take out the low at 94k, we still have a bit of support down here. You can count this as a wave A, B, then you have wave C ending here with inside C, this 3-wave structure. Then you look for D, E finishes here, and then you continue towards the upside. So in other words, it's basically a continuation of the range in that case, and then you continue towards the upside. Be mindful that this triangle can be a wave 4 by itself for the red wave 4, as just explained. However, a triangle here can also be part of a W, X, and then wave Y being a triangle, which is a sideways complex structure, and you move towards the upside. The result is exactly the same. It's just that the count on the 4-hour/daily time frame is going to slightly change. Now, your more, I suppose, bearish scenario on the 4-hour would be still bullish, but you would move to the downside to take out the low at 91. Is a double zigzag here. So we then have A, B, C down in wave W. This move to the upside here is your wave X. And you look for another A, B, C to the downside in a wave Y to test the area between 85 and 90k. After testing this area, we want to see a strong support and price moving towards the upside. Now, in this scenario, preferably this wave B, however, was a little bit longer because we then have our diagonal here in a wave A. If we take a fib time from the start to the end of wave A, toggle on the 0.382, which generally is a minimum target for the following wave, right, in relationship to the first one, you can see that this high over here was made before the 0.382, and preferably B would have finished after the 0.382. So in this case, it would be nicer if we are not done yet with wave B before a C towards the downside. But if you do lose 94k and also then lose this support box here, 93.6 to 94.2k, then this scenario will increase, of course, in probabilities, especially if we get strong impulsive structures to the downside, as a wave C should be an impulsive move. So in that case, you're going to look for 1-2s, then you get your 3. This should be your high volume, big move to the downside. And then eventually you get your 4, 5, 4, 5, 4, 5. You get a bit of a grinding structure. So we have a grind at the beginning, look for a quick move down, get a grind at the end, and then we look for price to move to the upside. And when you see a grind like this, looking for long positions is incredibly interesting. And personally, that is one of my favorite setups. So that is definitely something that I will keep an eye on. Now, the invalidation for this is 102.6k on my chart. That's the high of your wave X. And wave B is not allowed to take the origin of wave A in a 535 zigzag in your wave Y. Now then we have to, of course, cover the bearish scenario as well. This is the most bearish scenario on the chart. So in this scenario, we finish this range here as a WXY with a triangle in wave Y, which means that the impulse then starts over here and we count 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. So basically, we, compared to the bullish scenario, avoid this 1, 2. That's the main difference. Here you have the red 1, 2 leading to the red 4, 5. And in the most bearish scenario, you do actually not have the 1, 2 here. You count it as part of a triangle. And then this is your 5-wave structure, right? And in this particular case, we then have an all-time high, and we look for much lower prices. So here we then have a wave 1, 2, 1, 2, 1, 2, and you want to see the mother of threes to the downside. Everyone gets wrecked, much lower prices, etc. Not the highest probabilities yet. This wave 2 is 11 times longer in time than this wave 1 to the downside. This green wave 1 is a lot longer than this yellow wave 1, which also lowers probabilities. So for this to increase probabilities, you basically need to lose and flip 85k. That is when this scenario really starts to be interesting. As long as you hold 85 minimum, it's interesting to have on my chart. But it's not yet the highest probability scenario. It's just good to be aware of such a scenario with regards to risk management and knowing the meaning of the 85k level as well. But at the moment, it's just not yet relevant, but it's good to be aware of this scenario in case you do lose 94, 91, 85, right? That's where things get troublesome, I suppose. And then a scenario that I saw online and got some attention, and I have no idea what the reason is for this, but this is literally such a low probability scenario where people count this as the end of the correction over here, and then count this as a wave 1, and this as a wave 2. Look, besides the structure of a wave 1 here, of course, right, either impulsive or corrective, counting this as your wave 2, touching the 886 is incredibly low probabilities, right? The 886 as a target for a wave 2 is ridiculously low probabilities for that to happen. Therefore, it makes a lot more sense to finish a correction at this low. If you want to count this as a wave 1, 2, which is fine. It's just that this 1, 2 here does not make any sense to me whatsoever because of the 886, which is super low probabilities for a wave 2. So it makes more sense to then end the correction at this low and then have, for example, flat X zigzag, right? A WXY, finish your 4 over here, 1, 2, sorry, continuation to the upside, right? Now, in this case, of course, preferably we do not take 94k. And if you do take 94k, then you have to find another corrective structure here, which, WXY, XZ, WXY, whatever. And then eventually you move towards the upside. But mind you that this movement looks very similar to the movement of the triangle, right? So who's right, who's wrong? It doesn't really matter. In that case, the price action is relatively similar, right? If you count this as a 1, 2, and then eventually you get your 3 up, right? Or the triangle A, B, C, D, E, you get your 3 up. It only matters for what happens later because with this 1, 2 here, you get an extra 4, 5 at the later stage, right? 1, 2, and then eventually 3, 4, 5. And in the triangle scenario, you're going to miss out on this 1, 2, which means you have one less 4, 5 at a later stage, basically. We do have some news this week on Wednesday and Friday. Wednesday, 2:30 p.m. and 8 p.m. and on Friday, 4 p.m. Central European time. So make sure you trade safe. It can increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then the probabilities at the moment remain highest for the bullish scenario, where we are looking for a wave of 4 and eventually a wave of 5 towards the upside. The bearish scenario has very low probabilities. As long as you do not lose at least 85k, doesn't really make too much sense to make this the highest probability scenario. And the Hopium Extreme Scenario, basically, where this would be the start of a wave 1, 2, and then another 1, 2 is very low probabilities because the first wave 2 then touched the 886 as per the analysis. Makes a lot more sense to then finish wave 4 at this particular low after a bigger 3-wave corrective structure and count a wave 1, 2 over here. But as explained, the price action would be relatively similar to the local triangle scenario. So if we then zoom in locally, then locally over here, the highest probability would be looking for your triangle or looking for that 1, 2 as long as this low stands. If you do lose 91k, the probability switch to a double zigzag to the downside. So we then have our WX and then our wave Y. Look for signs of strength, right? We want to see a bit of a grinding structure, a couple of 4, 5s, and then look for price to move towards the upside. And then the most bearish scenario, being the impulse to the downside, only gets probabilities if you lose 85k. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.